Welcome back to the show. Let's talk to Mike van Dulken. He's the head of research at Accendo Markets. Morning to you, young Mike. Let's talk copper and iron ore. Let's kick off with copper. This clearly has recovered this year. What are your thoughts at these sort of levels?
Yeah, I mean, huge recovery. Testing, multi-month, if not multi-year highs there at 7,000. We had a bit of a pullback in late August, but the good sign is that we found that rising support around September and into, we've even seen a bit of a bounce there in October. I mean, that could actually be a bullish flag in itself that takes us back to 7,000. So there is the optimism there. This is a fairly good barometer about how the markets are feeling about China, which is still a market that can really move markets, financial markets that is. We did have disappointing services PMI data on that's the cakes in. It's not the official read from China. That was a bit disappointing overnight, but that is services rather than manufacturing. Copper's obviously going to be more of an impact on the manufacturing segment. So that's looking fairly buoyant, and I think the next chart, which is iron ore, is another one that's been touted as a big indicator for China. I mean, this one, the rising support goes all the way back to late 2015. I mean, there's not many charts that we look at nowadays where we go back that far.
Yeah, that's a very good, valid point.
So if that rising support, I mean, I know there's a little bit of a test at the moment, but if that can hold up, give it 440, 450, it could set us up for a bounce. A good strong 15% bounce there back to 600. Reviving confidence in China, which in turn would revive confidence in global economic output, global recovery, which, let's be honest, is still on track. It's still a global recovery, albeit with, as we talked about earlier, just multiple geopolitical hurdles along the way, which, yes, they crop up, but they've very seldom have they, scuppered what is an overall still rising trend of recovery from the global financial crisis.
Mike, thank you very much indeed.
Thank you.